Good morning, it's UPB here from OptionMillionaires.com. It's Thursday, December 12th. FCX brought up as a private twit halfway through yesterday's trading session. I got into the $35 puts right up here at about 22 cents. No, exactly 22 cents. I got out at 37 cents. They closed the day at 63 cents down here. So it was a nice private twit. Also sent out a twit about Wynn Resorts when it was hitting its highs. The 180 puts that expire this week were going for 61 cents. That was my entry. They closed at $1.20. So that's been a nice gain so far. Of course, the market's closed. I can't close them out. Wynn Resorts could spike 3% to the upside. They could go to zero. And then it won't be such a good trade after all, right? But that's the risk you take when trading stock options. We had a couple nice private twits last week. We had Goldman Sachs. Those were 300% gain. And then the week before that, Tesla. The Tesla 120 calls, I bought it at $1.20, ended up hitting over $10. So it's been pretty nice. That's what we do at OptionMillionaires.com. Hey, we're not going to sit there and tell you we've got a 90% accuracy. We don't. But when we hit it big. No. Let's move on. I just want to talk about the S&P 500 because I brought this up on Friday. See this big green blob here? If you go back, you'll see what I was talking about back on Friday, a possible topping pattern. We haven't seen a topping pattern for the S&P 500 in a long time. You have to go all the way back to 2012. 2013 has just been a bullish kind of year. Since the Abenomics low in November, let's go back a little further. There we go. The Abenomics low in November, all the way through. That was in 2012. Every bottom has really been a nice V bottom. Okay, we kind of had a high and a lower high and then rolled over, a high, a lower high, rolled over, a high and rolled over. Now we've got a high, a left shoulder, a head, and a right shoulder. So to me, and I talked about this in the chat room at OptionMillionaires.com, this indicates a move, and this is support here at 178. That's where if you draw the trend line across, and I'll just bring this up and I'll show you exactly what I'm talking about here. Get in there, okay. You can see the 178 level was resistance on 3 occasions before breaking out the 4th time in the middle of November, acted as support, almost got down there a couple days ago, and then looking to test it at least again. If we do break through that, I think there's $75 level, because you could draw a trend line across right here. See that? That low that we hit right just before November 11th, bring that across. That would be the next level of support, and then this pink little line here would be next, 171. So we'll see. This is a perfect timing because think about it. The market's had its best year in a long time. The Nikkei, I think, is up 47% for the year. It's its best year, gosh, a long time. And people are locking in profits. So if you own Google at, I don't know, 10,000, 10,000, that'll be in 2017. 1,090, you bought at the high, and all of a sudden it's starting to fall. You might be apt to sell it. And on the same side of the coin, if you bought Google when it was 850 and you're up 30% on your investment, you're going to lock in profits at the end of the year. So I think that's what a lot of what we're seeing. The VXX, and I pointed this out in the chat room at OptionMillionaires.com yesterday, how it was spiking and holding its gains, and usually the garden variety move that we see would be a sell-off at the open to about an hour into the trading session, and then stocks get bought from there on out. But in this instance, we continued, we consolidated, we did not fall, and then the VXX closed just off the highs of the day. So to me, that was telling me that this market was not going to bounce. And indeed it didn't. I mean, if you look at the action, it was down pretty much all day. And you can really see after we hit our all-time highs and then came back up to it again on Tuesday, just about, we've been pulling back ever since. And people are taking their profits. We had the bubble talk, and not sure this is quite a bubble, but a sell-off here or pullback is certainly healthy after the run we've had. And again, that'll set up 2014. It won't have to hit 190 to make any kind of gains for the year. You get a little bit of a pullback. And then, actually, if you look at it, we had New Year's Eve last year, started the real Santa Claus rally. It was a little belated, but we had that big breakout and never looked back. Let's look at a couple other charts. Goldman Sachs spiked higher yesterday, and then has been melting off ever since. This was the Volcker rule. It actually went the opposite way. You can see it hit up about 172. The 170 puts were at 80 cents. That's where I got them 2 days ago. I sold them out yesterday at $1.60. They ultimately went to almost $3. But Goldman Sachs broke below support here. So it looks kind of weak here short term. I brought a chart up of it a couple weeks ago, talking about it looking weak and heading back to about the 160 area. So let's look for that. I brought up Google again, off its all-time highs, pulled back here, melted lower. We'll see support will be here, and then ultimately down here if it does indeed drop that far, which it might not. We have Facebook, which is breaking to the upside, added to the S&P 500. Look at this. Let me just extend that line because I haven't looked at the chart for a while. So we're looking at about $51, $52 a share here at the open. So that's going to be nice for anyone who bought the calls. Congratulations. And let's just move on. A couple more stocks to talk about. I talked about in my video on Monday. MasterCard. Don't fight the trend. It did indeed 2 days prior to the move up on Wednesday. Pulled back after spiking to new all-time highs. This time pulled back a little bit, but doing a 10-for-1 forward split. MasterCard is the third highest stock, I think, in the S&P 500, highest price stock, behind Priceline, or Google, then Priceline. So people are anticipating possibly Google or Priceline doing the same thing. So MasterCard, 10-for-1 forward split, what is it, $2.5 billion share buyback, and increasing their dividend. It's all very bullish, and traders were gobbling it up. And then when they were done gobbling up MasterCard, they said, oh, let me go to Visa. And you can see Visa had a really strong day yesterday, all day long. Pulled back a little bit late in the day. You see, there's another, that's almost a head and shoulders topping pattern. See that? It's a short term, it's a 1 minute daily chart, but you can see topping pattern. Basically, you hit a level, and then you move to a higher level, then you hit the same level as before. It's a topping pattern. You don't have the momentum of buying pressure to get you to a new high, and that's why it collapses. So that's Visa, MasterCard. Let's look what happens today. Follow the VIX again, the VXX, and also bonds were surprising, sold off. So to me, when we see a nasty sell-off in bonds, interest rates start to rise tremendously, that will be a sign to sell stocks. But for now, I think they're still the place to be for risky days, and I'm surprised to see it sell off. But if you look from a chart perspective, longer term for TLT, it still looks like that's what's going to happen. Longer term, we're going to sell off, interest rates are going to rise. All right, it's UPB here from OptionMillionaires.com. So we have the market selling off in spite of all the bullish sentiment. And that's what I wrote about this weekend, talked about it, said, hey, a lot of bullish sentiment out there. Nobody thinks this market's going to fall or can sell off, and we're starting to sell off. So we'll see if we get a continuation of that today. All right, I'll be in the chat room at OptionMillionaires.com. I'll tweet any of my trades via private Twitter. Everybody, if I don't hear from you again, have a happy holiday. Goodbye.